Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Let's talk about what we're seeing this morning coming out of Wall Street. Thanks for listening to the morning podcast. So far, we have the S&P 500 starting to break down. It started lower, but it's going lower. Same thing with the Dow Jones Industrial Average. Same kind of mixed with Nasdaq. Russell 2000 is getting better as the morning goes. So let's look at those numbers. The S&P 500 is down 0.5%, down 34 points in at 68.46. The Dow is down 64 basis points, a little more than half a percentage point, down 316 to 49,346. The Nasdaq down 102, down almost 0.5%. The Russell 2000 is break even after starting down 0.25%. Bitcoin is down 831 to 66,365. Ethereum's under 2,000, sitting at 1925, down 46. The question is now the time to buy Bitcoin as a trade, or do you wait for it to go 50% lower, which is what some analysts have it at? I'll talk about that later in the show. 10-year Treasury sits at 4.08%, explaining why the Russell 2000 is rallying, in my opinion. Expectations for a weaker economy. Crude oil's above $70 a barrel. It's at $71.76. It's the best trade. It's not the best trade of the year so far, but it's one of the best trades after we talked about it last year, sitting around 60. That seemed to be its base. Now it and other commodities have moved higher in what's called a commodity super cycle. Gold's at 5,022, up $12 today, up 0.25%. Silver's up 0.5%, up 40 cents to $78. Copper is slightly down. Brent crude up $1.41 a barrel, up 2%, $71.76 a barrel. Psychologically, getting above that $70 level is going to draw some interest. When does it become too expensive? Probably at 120. That would be about right. The Fed's surprise shift yesterday, talking about in their minutes of raising rates, has definitively caught the eye of the Trump administration. Federal Reserve officials appeared surprisingly wary of cutting interest rates when they met last month, with 7 even suggesting the central bank may need to raise rates if inflation remains stubbornly high. Trump has repeatedly said he wants the next Fed chief to deliver lower interest rates. And on January 30th, 2 days after this policy meeting, he announced he would nominate Warsh, a former Fed governor, to take over when Jerome Powell's tenure as chair ends in May. May is not that far away. Let's start thinking about circling it, if you will, on our calendars. Lots going on that we could definitely dive into this morning. Quick look at the market snapshot year to date. Shows us crude oil up 15%. That should help push players like Exxon, Chevron, Devon Energy, and others higher. Bitcoin's down 25% year to date. Gold's up 15.8%, silver up 9.3%. Magnificent 7 as a group down 5.6%. The Morgan Stanley Country Index up 2.9%. Russell 2000's up 6%. Definitely mixed markets, but definitely different looking returns for assets in the last, 5 months now versus the previous 3 years before that. Mark Zuckerberg testified at a landmark trial on teen social media addiction in the United States in front of a jury. What was interesting, and again, I don't follow the court case on this one, so keep that in mind. What I thought was interesting was that he had a couple of his either security people and or lawyers show up in Meta Ray-Ban glasses. It seemed like an odd product placement, if you will. The S&P 500 is flat year to date, but there's just 94 stocks in the S&P 500 that are up or down less than 5%. There's 117 stocks that are up or down more than 20% year to date. It's a stock picker's market. I'll repeat that one more time for you. what I'm looking at here is essentially 220 stocks. 94 of them are up or down just 5%, which kind of matches with where the year-to-date returns are. But 117 of them are up 20% or down 20% year-to-date. Forget the Fed chair, the best market predictor might actually be a stable this year. Happy Chinese Lunar New Year. The year of the horse has officially begun. I saw a chartered market analyst. I saw that an analyst had something to say about this. Markets seem to like animals that walk on all fours. And I for real? Is that how we're going to make our financial investments this year? So when the Chinese year of the horse, goat, ox, pig, or dog, they tend to show the strongest performing years in the 12-year cycle. They often deliver double-digit gains. The two-legged signs like the rooster and the monkey come up short. I'm surprised that someone's actually putting this in writing, but it gets crazier the more you look at it. The year of the goat, the S&P 500 typically returns about 14.9%, the ox 14.8%, the dog 12%, the pig 11.9%, the rabbit 11.8%, tiger 10.4%, and then you're starting to see years where the monkey up only 9.2%, the horse 6.3%, the rat up 5.2%, the snake down up 2.8%, and the rooster just 1.8%. I don't know what to make of that other than to say, please don't make your investment decisions based on that. Some things that I'm looking at in the current market conditions is stock buybacks are starting to thin. They've been doubling over the last 5 years to $925 billion. But as companies shift cash towards capital investments right now, buyback demand could decline by 5% this year. That would be a negative for total returns. If buybacks are low, IPOs might be the highest in the decade. Save for 2021, we've already seen dozens of new listings and SPACs in 2026. There's rumored to be another 150 more in the pipeline. Last year was very low on IPOs. So with fewer buybacks and IPOs getting our attention for more cash, that could be a problem. When I say getting our attention, my son will go, and he's immature and he's young, and say, Dad, do you think we should get the IPO of OpenAI? He's trying to suck up to Dad. And I'm like, well, don't you think everyone's already made money in that? It's been around for 15 plus years. It's got a valuation already. It hasn't grown into its valuation. It is already done that as a private company instead of a public company. This isn't like, and I tell him, I call him Z. I say, Z, this is not anything like, the 1980s and 1990s of buying Microsoft or Intel, or the 90s and 2000s of Apple and Google, Microsoft. It's not the same. And yet he wants to. The AI agents, the software companies, it's expected to post earnings boost of about 14.1% this year. That would outpace the 13.7% growth anticipated for the overall S&P 500. Does that mean they're a buy or not? I don't own the Goldman Sachs software ETF, ticker symbol IGV. If you take a look at it, it is attractive technically because it's pulled back 30% with earnings growth of 14% expected. I have no shame in the next thing I'm about to say. And I hope you have no shame in how you approach these things as well. Amazon just sent me an email that told me how much I saved by using the Prime Visa in 2025. The Prime Visa card gives you 5% back on all purchases on Amazon. I've got my family whipped into shape. If you want anything from Amazon, you are using the Prime Visa card. No other card is allowed to be used. Because 5% off is 5% off. Target's got a red card. 5% is one of the largest numbers off you typically see. Now, again, Amazon does sneakily raise prices due to delivery cost, and not necessarily just Amazon, but companies that sell on Amazon. So any groceries that I get from Amazon, I always get on a subscription basis because it can offer 5, 10, or 15% off. Otherwise, I just get my butt in the car and go to the, if you're doing something like toilet paper, Costco is great. If you're doing something, you see where I'm going, like figure out where you shop or when you shop. And I'm okay with it. What was it? I think on Amazon, they offered me 35% off a one-time purchase on laundry pads. These are the ones that are not the pods with plastic. These are just woven material together. It has a teeny tiny footprint because it's recyclable. The box that it comes in versus the big plastic jug. And they offered me 35% off if I bought 4. I'm like, you know what? I'm going to be washing clothes hopefully for more than a year. This seems like a good idea. So I bought a lot of laundry detergent. If anyone wants some, let me know. So the market continues to look up at $1,700 is what I got from using my Amazon Visa last year with Amazon products. I'm okay with that. I use my Verizon card for 4% off restaurants and grocery stores. Every now and then I get a one-time promotion of like my Best Buy card. Anytime I buy something at Best Buy, I use my card. It's got the best rewards tied towards it. But every month, Best Buy says, hey, do you want to change and get 5% off on gas or airlines or hotels or electronics? You tell us and we'll make that your category of the month. And 5% is 5%. I've got it down to such a weird little science, and my kids know it. My wife's not the best at following it, but she kind of gets it. That my Citi Double Cash card basically covers whatever else isn't covered. And that's 2% back. That's 1% when you buy, 1% when you pay your bill. It adds up. So the S&P 500 is playing with that 7,000 level. Will we get above it today and or not? I don't really care about the short term. Geopolitical angst is in the news today. The U.S. is sending more military weapons to be in position to strike potentially as early as this week in Iran. If the president decides to order said strike, I don't know. Prince Andrew was arrested in the UK. And I think we're all sick and tired of the Epstein files and the Epstein stories, except for the victims. And of course, everyone wants justice. Would I be surprised to see an attack on Iran if something hot is released in the markets? I would not. It's funny because people email me, and I used to have a friend who's very English. Came to America, married a woman, American woman. Worked with me in radio, and man, when you get up at like 4 a.m. and do radio with someone, he was my board op. We've got a bond there. But he drops me a text. He's like, what do you think about Peter Thiel? He lives in your part of the country, doesn't he? My friend is based out of Chicago. And I'm like, what do you think about Prince Andrew? He's from your country. Think he's going to testify? So yeah, I guess we all have things that we point out. It's interesting to note that my brother's daughter, which I believe makes her my niece, she's on Instagram, and she's got a really popular Instagram channel on the American dolls. These are these creepy dolls. And when I say creepy, you have to look at one. They look like they were designed back in 1920. What the typical American girl would want to play with, said doll. So she has an Instagram page that's really popular, and she makes money off of it by posting memes, maybe making fun of politics, but she poses the dolls in different positions. Maybe having coffee at Starbucks, and they talk about the rising price of coffee. Anyway, she's really anti-data center. And living in California, my geography makes it like AI, we got to win this. If we don't win this, China's going to win this. And I want to like reach out to her like, please don't be anti-data center because we don't want China to win this. Your geography changes how you invest. She doesn't want higher electricity prices. When you saw the robot parade that China put on their Lunar Day celebration, they had these robots over the weekend that look like robots from movies. Standing on 2 legs, humanoids. But they put traditional Chinese gear on them, and then they had them do things like sword fight and fight with nunchucks just to display. And there's kids around. I'm like, they have a lot of confidence that this is going to go well. Now, again, what comes out of China is terribly well edited. So we're going to watch oil this weekend with the U.S. military in a position to strike. Walmart's in the news. They topped fourth quarter earnings expectations, but issued disappointing guidance for the first quarter and for 2027. A lot of talk about return on investment for the U.S. hyperscalers after OpenAI's Sam Altman acknowledges remarkable progress by Chinese tech companies. There's a lot of chatter that the FOMC minutes for the January 27-28 meeting had a hawkish tilt with higher interest rates expected in the first half of the year. Then we got the initial claims this morning for the week ending February 14th, decreasing by 23,000 to 206,000. There's been a suggestion that seasonal factors are the basis for the low reading, but even that isn't the case. The level of initial jobless claims is still quite low. When Trump fired the head of the Bureau of Labor Statistics, a lot of people like me started saying, what are we seeing out of Washington? Is it what he wants to be seen? Or is it a real number? Again, my location in California probably skews me towards not trusting the administration as much as maybe someone who lives in the South. There's some mixed news. The Philadelphia Fed index increased to 16.3 in February from a 12.6 reading in January. The dividing line between expansion and contraction here is zero, so the February reading suggests there was an accelerating pace of expansion for the manufacturing sector in the Philadelphia Fed region. Walmart shares are mostly flat after its full-year earnings outlook for 2027 fell short of expectations. CEO John Furner taking over this month. His guidance looks like a chance to reset expectations. Food inflation was just 1% in the fourth quarter. Walmart also authorized a $30 billion stock buyback program. I like that buyback program. That's if I'm looking for 5 things in stocks to buy and 5 things that if they went negative, I'd say sell. Buyback's on the list, as is product. Sales growth, gross margins. Those are 4 of them. Earnings expectations drive near-term performance, but earnings drive long-term performance. Sales growth is the number one key for me in buying stocks. Then probably margins right thereafter. Earning estimates are on that list. Stock buybacks, stock dividends, free cash flow, debt to equity. There's a couple sitting there out there. Walmart's quarter saw sales excluding fuel rise 4.6%. Strength was driven largely by households earning over $100,000 income. Under $50,000, the lower income continue to face budget pressures, with some customers managing spending paycheck to paycheck. Sam's Club, excluding fuel, increased 4%, up from 3.8% in the third quarter. I've been in a Sam's Club once. I guess you're either a Costco person or a Sam's Club. Walmart delivered a solid fourth quarter print, healthy underlying trends. Walmart's entering a peak investment phase in 2027 tied towards supply chain automation store remodels. That could be tempering some of their guidance. International operations are contributing nicely. Sam's Club remains a steady performer with strong e-commerce growth. I would consider the name either for a long-term patient investor or for something like my kids. It's certainly expensive in the short term. So it's on my list of I would buy it no matter what. I have to be careful on what I say. Anytime it goes 15% from its all-time high or from recent highs. Boeing landed a deal for nearly 100 jets from 3 Vietnamese airlines. Evidence that its backlog is building nicely. John Deere expects profits in 2026 to be in the range of $4.5 billion to $5 billion, up from its forecast back in November of $4 billion to $4.75 billion. Deere is seeing a recovery in its construction and small agricultural segments. Shares up about 5% on that news. I own Caterpillar, therefore I find Deere to be redundant. Also, in theory, I own Deere because it's in the S&P 500 funds. eBay had a reported blowout quarter. Do we care about eBay anymore? I rarely use it, but we all used to use it back in the 1990s, early 2000s. Goldman upgraded eBay to hold from sell. This is another long-forgotten stock that has done well to get itself back into being relevant. Needham upgraded analog devices to buy from hold. Strong quarterly results, strong guidance. Oppenheimer also lifted its price target to $400 from $350. That's a 15% upside. Their chips are used for power management and connectivity and data center plumbing infrastructure, if you will. The data center business is growing 50% in 2025. Airline stocks are falling today as the U.S.-Iran tensions are pushing oil prices up. People are starting to talk about the stock market going 24/7, 365. And I wonder if that's a good idea, a bad idea. You get a scenario like what's happened this week. J.D. Vance says, talks didn't go that great, and all options are on the table, including us throwing bombs at them. If you do that at 10 p.m. and I'm asleep at 10 p.m., I wake up to that news and the stocks have already moved on that news in real time. That's bizarre. So who's doing well? JetBlue is underperforming, down 8% today. Ticker symbol JBLU. Allegiant is down 4% on the higher oil prices. American Airlines down 5.5%. Delta Airlines down 5.25%. Alaska Airlines down 5.8%. United Airlines down 5%. Frontier and Southwest also dipping on that news. DoorDash shares climbed almost 10% after the company missed revenue and earnings. But the CEO, Tony Zhu, highlighted the strong performance in Deliveroo and the British food delivery platform that DoorDash acquired in 2025. Stock's down more than 23% year to date, so I guess the news had some positives in it. DoorDash should benefit from a big investment cycle last year. Evercore added Dell to its tactical outperform list and reiterated its buy ahead of the quarterly earnings next week. Analysts still lowered the price target from 180 to 160. Evercore sees upside to Dell's current revenue and earnings expectations, citing stronger near-term demand across traditional hardware and AI compute. On one hand, Dell's got AI really helping it out, but on the other hand, of selling personal computers to businesses and individuals, the higher RAM price is really affecting the cost of a total PC and thus the margins. Putting off purchases means sales dip. Putting off purchases mean margin slip. Just throw that down there for you. Alphabet introduced Gemini 3.1, a smarter model for your more complex tasks. It's crazy how fast Anthropic is releasing Claude updates and Google is releasing Gemini updates. They released a major update to Gemini 3 DeepThink to solve modern challenges across science, research, and engineering. They're releasing the upgraded core intelligence that makes breakthroughs possible. They're shipping 3.1 Pro across the consumer and developer products to bring this progress in intelligence to your everyday applications. For Enterprise and Vertex AI and Gemini Enterprise for consumers with Gemini App and Notebook LM. For developers in preview via the Gemini API and Google AI Studio, Gemini CLI, the agentic developer platform, Google Anti-Gravity, and Android Studio. I do have an event coming up March 11th, 6:30 to 8:30, Lafayette Library, Beyond the Noise, Navigating Wealth in Uncertain Times, CFP, Stephanie Richman, CFP, Nathan Rogers. Are you ready for retirement? It's a free in-person event to better understand today's markets and help you feel more prepared about your next moves. When markets are moving and headlines are consistently making you nervous, it can be hard to know what information matters, which ones to tune out. What's some good products out there? What are some bad products? You need to have a cohesive wealth strategy that connects investing, taxes, retirement, and long-term goals. You can sign up for the event today at robblackshow.com. It's robblackshow.com. It's one of my only events in the East Bay. It's the only event on a Wednesday evening, 6:30 to 8:30. Most of my events are on weekends, so this is your chance to skip out of work. Easy parking, great restaurants in Lafayette. I'll be at the event early talking about stocks and investments, and I hope to see you there. robblackshow.com. Coming up, got another segment on some of the big tech news of the day and what to do with Bitcoin.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
Don't want to work forever? Check out the Retirement Planning Guide on robblack.com. That's robblack.com, powered by EP Wealth.
Thanks for listening to the show. As the morning has gone on, I think there's some concern about this weekend with Iran, some geopolitical concern. Mortgage rates dropped to their lowest level in nearly 4 years. 30-year fixed mortgage rate fell 8 basis points to 6.01% for the week ending on yesterday, Wednesday. That's the lowest level since September of 2022. 15-year fixed dropped 9 basis points to 5.35%. Generally speaking, if I can go back in time, all of my mortgages would have been ARMs or 15-year fixed. To get the lower rate, I've never stayed in a home for over 15 years. In fact, I've never stayed in a home for over 10 years. But that's hindsight. I think that's interesting to note. Walmart CFO said food inflation looks to be coming down. Walmart just lost this sales crown to Amazon. Back in the late 1990s, when I started this show, I'd say things like, Walmart is a great investment because it's bigger than number 2, 3, 4, and 5 put together. Can't say that anymore. Minnesota Fed governor said we're pretty close to neutral on rates. I think there were some leanings after yesterday's minutes from the Federal Reserve that they might raise interest rates this year before dropping them. There's a lot of questions on Wall Street right now. The United States Trade Commission is launching a review of the United States, Mexico, Canada trade pact on automotive rules of origin. Tough to say I'm going to invest this way or that way when the administration, in large part, has gutted a lot that pre-existed and put in their own standards. I get why a lot of people are always nervous on Wall Street. I think it comes with the territory. So the markets have done a little bit better as the morning has gone on, but we're definitely in the red on the S&P 500, Dow Jones Industrial Average, Nasdaq, and Russell 2000. Klarna stock is down 26% today. It's buy now, pay later company. They posted earnings that narrowly edged past analyst forecasts. They issued conservative guidance for the current first quarter. In 2026, guidance broadly missed expectations. I am not a big fan of buy now, pay later. Generally speaking, I think Americans screw it up when it comes to debt. And if you can't afford it, don't buy it. And if you have to afford it over 4 payments, don't buy it, is my general idea. Figma, it's a design software company similar in many aspects to Adobe. They're up 4%. They reported better than expected fourth quarter earnings. Etsy up 11%. They've agreed to sell Depop, the secondhand clothing store, to eBay for about $1.2 billion in cash. Shares of Etsy got an additional boost on the back of the higher revenue and better than expected earnings as well. Fourth quarter adjusted profit at eBay topped expectations. They also authorized a $2 billion stock buyback. Wayfair, their shares are down 11%. They make furniture, and furniture has been hit hard by tariffs. Their results are beating expectations. While touting market share gains, Wayfair's annual sales grew for the first time since 2020. It's still reporting net losses. Its first quarter guidance called for revenue growth in mid-single digits compared to the expectations of 6%. I think I might have bought a Wayfair dresser for my house up in Tahoe. And this is really sad to say because now you can't say the words Tahoe without talking about the tragedy of an avalanche taking the lives of 6+ people. And 8 people, maybe another one. Some moms on a ski trip amongst the 9 dead in the Tahoe avalanche. I have a place that's probably 2 miles from there. It's tough to say exactly the distance due to things aren't always straight when you're talking about mountains. There was a ski team that a lot of the moms got together and said, let's do this as moms. A 3-day backcountry skiing trip. A group of 15 skiers, including 11 clients and 4 guides, caught in the avalanche. Huge tragedy, again reflecting the dangers of Mother Nature, maybe of climate change, particularly when you start saying mothers. The husbands went off skiing together, and then the wives would take their turn, kind of doing different things, if you pick up what I'm saying, on the culture of being out in the snow. It had been an annual excursion for families whose kids were on the Sugar Bowl ski team. That's a huge loss of life, and in some cases, financial as well, if insurance is involved. I have term life insurance until I turn 60, only because I had kids in my 30s. I didn't have term life in my early 20s because I was single. If I died, my cat would get the money. That seems ridiculous. Then I got a spouse and I got kids. And that's when I started using term life. I don't use whole life. I don't use variable life. In this case, I hope many of the families had term life insurance. It's the cheapest insurance. It's the best insurance. It covers the term of your life when you're a mom, when you're a dad, when your kids need that money, when your spouse needs that income that is lost from working or from doing the home care for the children. Home care is not cheap. Child care is not cheap. So I don't have anything else to say on that other than that it is a tragedy and it is not lost on me. Madison Square Garden Sports, a stock that I started talking about 10 months ago. It's been on an unbelievable winning streak. It owns the New York Rangers and the New York Knicks. It's a holding company. Historically, this type of holding company in sports teams hasn't done as well as private. But the public markets are starting to realize, hey, we're seeing a new NFL team sell for, not a new NFL team, but a NFL team sell for a new record. NHL teams, NBA teams consistently see higher prices. So these stocks have been on a tear. Fortune estimated in October that the private market value of the Knicks was about $9.75 billion, a 30% year-over-year increase. The private value of the Rangers is about $4 billion, a 14% increase. Spinning off these franchises into their own holding companies makes a lot of sense. Now, I had a pretty good call on that, and it's tied towards headlines. When you hear about, the Dallas Cowboys being worth $10 billion or whatever it is, it's shocking. When you see how much Jerry Jones paid for the Dallas Cowboys. I believe that Donald Trump had a chance to buy the Cowboys. News about that time back in the 80s and 90s, or he said, she said a lot of times, but I think he had a chance to get it for $50 million. Something that's worth $10 billion plus. What a purchase. Trump at the time said he didn't think that the NFL was going to be around for long because the USFL and a team he bought, the New Jersey Generals, were going to disrupt the old school NFL. So anyway, the Rangers last won a Stanley Cup in 1994. The Knicks last won an NBA championship in 1973. I feel bad for the fans because the owner runs the company and the team's very, very poorly. Meta is rebooting its smartwatch plans, aiming for a 2026 debut. Instagram owner Meta plans to release its first smartwatch this year. The company has revived its Malibu 2 smartwatch project. The device that's set for release later this year will feature a health tracking and built-in Meta AI assistant. Meta explored a smartwatch roughly 5 years ago. At one point in time, they had plans for a 3-camera equipped versions, but it shelved it later in 2022 as part of a broader spending pullback on its Reality Labs unit. We've heard in the last 24 hours, Apple's going to be releasing glasses this year, probably. The Meta Ray-Ban glasses have sold 6 million units. Apple will sell 100 million plus. So Meta's trying to become more relevant. I just don't feel that they are. I own shares of the company. I've recently purchased shares of the company after a pretty miserable year for the company. Booking Holdings say travel expectations need to be lowered despite fourth quarter upside, stock split, and raised dividend. A lot of people are interested in travel stocks, especially since they tend not to own the inventory. Earnings per share rose 70% year over year. Gross bookings rose 16%. Americans do love their travel. Generative AI is lowering customer service costs approximately 10% per booking, while improving engagement and conversion. Some investors are concerned that the ADR growth remains muted, up 1% on constant currency basis. The transformation program provides a meaningful self-funding capacity for reinvestment, reducing execution risk. The sell-off appears more tied towards elevated expectations and normalization narrative than any deterioration in core operating trends. Let's talk Bitcoin, the Bitcoin bear market. They tend to see 50% drawdowns. If you follow that rule of thumb, the bear market would see Bitcoin push below 30,000, one analyst said yesterday. Bitcoin has been stuck in the mid to low 60,000 in the past 10 days, struggling to break above 70,000. There's some uncertainty about the Federal Reserve's rate path. There's the geopolitical tensions that are putting pressure on asset prices. I'm hearing ridiculous things like, oh, wait till the millennials and Generation Z get their tax refunds and Bitcoin and AI stocks are going to soar. That seems like a stretch. Google searches for Bitcoin going to zero have hit the highest level since the currency collapsed in 2022. Greg Magadini, director of derivatives at Amber Data, said that for a true bottom, it's going to require a new set of investors coming in as old investors sell. I find people making wild calls like this to be fun and entertaining. I don't put a lot of value in it. Magadini said the next incremental buyer will be sovereign holders in a bull run, but that's not happening anytime soon. Quote, meaning we need to change in ownership for a bottom. We haven't seen that yet. For true capitulation, he wants to see Bitcoin drop to 35,000 to 37,000. Ouch. We've got another segment planned for you, and I got a big show this afternoon. In the big show this afternoon, I'm going to give you a stock pick tied towards cosmetics with significant upside, no dividend yield, but store growth is important. We talked about things to look for. Sales is one of them. You can always find me online at robblackshow.com. I have an event coming up. Dan Tatzin Community Hall at Lafayette Library, Wednesday, March 11th, 6:30 to 8:30. It's an in-person free event. It's a good chance for you to meet Stephanie Richman, CFP, Nathan Rogers, CFP, and a few other CFPs will be there. Last time we sold out in Lafayette, where we booked up completely. So make your reservations today. Sign up at robblackshow.com. It's a couple years ago, so it's my first trip back in the evening, 6:30 to 8:30. In Lafayette, free parking, easy parking. If you're nearing retirement, in retirement, or simply want a stronger framework for decision making, this event's for you. Sign up at robblackshow.com. That's Rob Black Show.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
For more information about EP Wealth, visit robblack.com. That's robblack.com.
I am concerned about how AI is affecting the workforce going forward. I'm in my 50s. I've saved enough for retirement. I have enough wealth to last till the day I die to pass it on to my kids with my estate plan. I'm not going to be giving them the Seattle Seahawks, but you get the idea. I'm worried for my kids. I feel like I've done them a disservice. When I grew up, there was opportunities to start your own companies. I think those opportunities are going to be a little bit more limited going forward, although I just saw a couple who started a business a couple of years ago on event planning for announcing for getting engaged. And I was like, that's brilliant. How come that's never been done before? And maybe it has, but they're making 7 figures off that stressful situation where a guy pulls out a ring, goes to his knee, maybe asks the woman's husband, father, no, not husband. That would be a mistake. Maybe ask the woman's, his fiance's father for her hand. And I did it twice in my life, and once was incredibly stupid. So incredibly stupid. I look back on it and, for instance, one of my good friends, she got engaged at Disneyland. I'm like, you're kidding me. You're a grown woman and a man does it in front of Mickey Mouse. And she goes, I kind of liked it. I'm like, that marriage ain't going to last. In fact, I didn't even think you're going to make it to marriage, and they didn't. I put a curse on them. You know, I once wished cancer on someone and his wife got cancer like 3 days later. Watch out. I'm kind of powerful. But anyway, back to me and the AI squeeze putting the pressure on the entry-level jobs. We're going to need less rental space, lease space for corporations going forward because kids coming out of college are finding it a tough job market. But teens remain optimistic about their future employability, report recently found. Amongst college-age students, the rise of AI is already prompting a significant shift in their post-secondary plans. According to a report from Junior Achievement, 73% of teenagers said the AI boom will have a mostly positive effect or no impact at all on their ability to get a good job that pays well. I'm less optimistic. Recent data does show that the labor market is doing well. The U.S. economy added more jobs than expected in January. The overall employment rate edged down to 4.3% from 4.4%. But for younger workers, it's a different story. 16 to 24, the unemployment rate stands at 9.4% in January. Double what's going on in the United States for others in the overall employment report. So fears of AI-driven white-collar recessions are already prompting a growing share of college-age students to pivot. This year, more chose to get a 2-year degree or even shorter-term credential to put greater emphasis on career training and post-college employment. I think that's good. I've told my kids, and I have to have this conversation with them. A lot of colleges are shutting down because they're going out of business. It's going to make getting into college tougher. But on top of that, I still think a college degree is worth it. And I hope my kids go to college. But if they don't, I'm going to be proud of them if they become dental hygienists or vet assistants, welders, police officers, teachers, teachers' assistants. I'm okay with anything because I've already told you I have enough money to last till the day I die. And they're going to inherit money at 25, 35, and 45 to get them to retirement and through life without having to do stuff that they don't want to do. There'll be a lot of philanthropy involved. I've made that part of my will and my estate plan. It's something I've gone over with my financial planners to create a lot of tax efficiencies in. Think about updating your estate plan. It's something you get when you work with a good financial planning firm like EP Wealth. Find us online at robblackshow.com. Now, 8 ways you may be squandering money in retirement. Expenses that made sense when you were working, they can drain your resources once you stop working. A lot of Americans, we plan to exhale, especially financially speaking. But financial planners say one of the biggest mistakes is failing to rethink spending habits once work ends. Costs that made sense during peak earning seasons and years often linger or quietly escalate, draining cash flow in retirement. Here are 8 ways that you can squander money in retirement. Outdated living arrangements. Housing is typically the largest expense and the hardest to reassess emotionally. A lot of retirees continue living in homes designed for family life. I've got a big home right now that costs a lot of money to heat. There's been a cold spell and rainy spell in the Bay Area, and I'm losing money out of my pocket, even though I've got solar that covers about 40% of my energy needs. It's not going to cover it all. The extra bedrooms, the large yard, you get the idea. Rising property taxes. I can cut my property tax. My property tax is $14,000+ a year, if not more, for one home. For a lot of people, that's a whole mortgage payment for the whole year. So consider your housing when you retire. What's it going to look like? Overinsured vehicles. Transportation is one of the largest household expenses after housing, and outdated car insurance is another overlooked opportunity for savings. Retirees frequently maintain high mileage estimates, unnecessary collision coverage on aging vehicles, or coverage limits that were designed for long daily commutes. Another area is credit card debt. You can have credit card debt when you got the big W-2 income coming in. I don't think you can have it after you're starting to live off what you have till the day you die. Splurging on travel and hobbies. For me, I get a lot of financial research that I'm going to have to cut off almost the day I retire, in large part because it's expensive. There's ways to enjoy seeing the world, getting research without having a financial burden. Another area that you're going to burn through money is helping your adult children. One of the most emotionally sensitive retirement expenses involves adult children. Retirees often help with rent, student loans, child care, health care, emergency expenses. Telecom services and subscriptions. I use Rocket Money to take a look at all my subscriptions, and oftentimes I have to tell my spouse, I'm like, you're paying $20 a month for ChatGPT. You're paying $20 a month for YouTube TV. And that's, I'm making up the numbers, but you get the idea. I just have to remind, you got a lot of subscriptions going there. And finally, healthcare expenses is something that's going to hit you in retirement. A lot of people don't realize you're going to spend over $300,000, very likely, on healthcare costs in retirement. Things like roofs happen. Retirement is expensive. Come learn more about your retirement, how you're doing, what it's looking like beyond the noise. RSVP today for Lafayette Library in Lafayette, California, Wednesday, March 11th, 6:30 to 8:30. Sign up at robblackshow.com. That's robblackshow.com.